So let me tell you something right now that is going to affect millions of seniors across this country. And I want to make sure you hear every single word of this because this is important. We are talking about a Social Security increase that is already hitting bank accounts. We're talking about $1,400 stimulus checks that are going out to over 1 million people. And we are talking about changes happening right now in June 2026 that every single senior in America needs to know about. This is not a drill. This is not clickbait. This is real money that is either coming to you or that you need to make sure you don't miss out on. So stay with me because I'm going to break all of this down for you step by step. And I promise you, by the end of this video, you are going to know exactly where you stand, exactly what you're entitled to, and exactly what you need to do next. All I ask before we get into it is one simple thing, takes you 2 seconds. Go ahead and hit that like button right now if you appreciate these daily updates, because it helps me get this information out to more people who need it. Now let's get into it. So the first thing we need to talk about is the Social Security increase. And I want to be very clear here because there is a lot of confusion going around about who exactly is getting this increase, how much it is, and when the money is actually going to start showing up. Because here's the thing. Not every single Social Security recipient is going to see the same thing happen to their check. And that is something that a lot of people are getting wrong right now. So let me clear all of that up for you right here, right now. The Social Security Fairness Act, which was one of the most talked about pieces of legislation in recent memory, made a massive change to the way benefits are calculated for a very specific group of people. We are talking about public sector workers, people who dedicated their careers to serving this country in roles like firefighting, law enforcement, teaching, and postal work. For decades, and I mean literally for decades, going back 40 or 50 years, these people were being shortchanged on their Social Security benefits because of two provisions called the Windfall Elimination Provision and the Government Pension Offset. These were rules put in place that essentially reduced, or in some cases eliminated, Social Security benefits for people who also received a pension from a job that didn't pay into Social Security. And for a long time, millions of people just accepted it because they felt like they had no choice. But that has now changed in a major way, and the impact on those 2.8 million affected Americans is significant and real. Now, here is where it gets even better than most people realized when this was first announced. A lot of people assumed that this increase would simply kick in going forward, meaning you would start seeing bigger checks starting now in 2026. But the way the legislation was structured means that back payments are also part of this equation. And that means some people are going to be receiving lump sums that account for the months they were underpaid, stretching back further than they expected. That is a big deal. And if you are one of the nearly 3 million people affected, you need to be paying very close attention to what is hitting your bank account or your mailbox right now in June 2026, because the money may already be moving. And now let's talk about the concern that some people have raised about this increase, because I think it's important to address this honestly rather than just pretending everything is perfect. The criticism that has come from some fiscal analysts and some members of Congress is that expanding Social Security benefits, while absolutely the right and fair thing to do for the people who were being shortchanged, does add to the long-term financial pressure on the Social Security Trust Fund. We are talking about an additional cost in the range of nearly $200 billion spread out over 10 years. And what that means in practical terms is that the projected date when Social Security might face a funding shortfall could be moved up. Instead of being a problem in 2034 or 2035, some analysts are now saying we could be looking at 2032 or 2033. Now, I want to be very clear. That does not mean Social Security is going away, and it does not mean your benefits are going to be cut tomorrow. But it does mean that this conversation about the long-term health of Social Security is more urgent than ever. And it is a conversation that Congress absolutely must have. In fact, and this is something that gives me a little bit of hope, there are lawmakers right now who are actively discussing other reforms beyond just this benefit increase. One of the things being talked about is changing the way the cost of living adjustment is calculated. Right now, the COLA calculation is based on a broad measure of inflation that tracks the spending habits of urban workers. But seniors don't spend their money the same way that working-age adults do. Seniors spend a disproportionate amount of their income on things like healthcare, prescription medications, and housing. And those costs have been going up much faster than the general inflation rate that is used to calculate the COLA. There is a proposal to switch to something called CPIE, which stands for the Consumer Price Index for the Elderly. And this would actually track the specific expenses that seniors face. If that change were to happen, many retirees would start seeing COLA increases that are more in line with what they are actually experiencing in their daily lives. That is a real change that could make a meaningful difference for tens of millions of people. There are also discussions happening about the Social Security payroll tax cap, which is the income level above which people stop paying into Social Security. Right now, once someone earns above a certain threshold, they stop contributing to Social Security on those additional earnings. Many advocates argue that lifting or eliminating that cap entirely would generate significant new revenue for the Social Security Trust Fund and help push that insolvency date much further into the future. Whether that actually happens is a separate question, but the fact that it is being discussed in serious policy circles is notable and worth watching closely. Now let's shift over to the $1,400 stimulus checks, because this is the part of today's video that I know a lot of you came here specifically for. And I want to make sure I explain exactly what is going on here, because there is a very specific reason why this money is going out right now in June 2026. And it is a reason that not everyone has been talking about clearly. The IRS has announced that they are in the process of sending out approximately $1,400 payments to over 1 million people across the country. And the total amount being distributed is in the neighborhood of $2.4 billion. Now, the important thing to understand here is that this is not a brand new stimulus package. This is not Congress passing fresh legislation to send out emergency relief money. What this actually is the government going back and correcting a mistake, or more accurately, addressing a gap that existed from the pandemic-era stimulus payments that went out back in 2020 and 2021. Here is what happened. During the pandemic, Congress authorized 3 rounds of stimulus payments. The first 2 came out in 2020, one for $1,200 and one for $600. Then, in early 2021, a third payment of $1,400 went out. For the vast majority of Americans, those payments arrived either as direct deposits or as checks in the mail. But there was a significant group of people, over 1 million of them, who either did not receive all of the money they were entitled to, or did not receive it at all. And the way you were supposed to correct that was by claiming something called the Recovery Rebate Credit when you filed your 2021 tax return. The problem is that a huge number of people either didn't know about this credit, didn't realize they qualified for it, or simply made a mistake on their return and didn't claim it properly. And as a result, over 1 million people are still sitting out there who never got the full $1,400 that they were owed. The IRS has been reviewing its internal data and has identified these individuals, and the decision has been made to send these payments out automatically. That is a very important word here, automatically. These people will not need to file an amended tax return. They will not need to call the IRS. They will not need to fill out any additional forms. The money is simply going to show up, either as a direct deposit if the IRS has your banking information on file, or as a paper check if they don't. The IRS has said the maximum payment per recipient is $1,400, though the exact amount will vary depending on each individual's specific situation and what they were originally owed. Now, if you are sitting there wondering whether you might be one of the people in this group, here is how to think about it. Ask yourself whether you received all 3 of the pandemic-era stimulus payments: the $1,200 in spring of 2020, the $600 at the end of 2020, and the $1,400 in early 2021. If you are unsure about any of those, or if you know you missed one or received less than you expected, there is a real possibility that you could be among the people receiving these automatic payments right now. The best thing you can do is make sure the IRS has your current banking information and your current mailing address, because the last thing you want is for this money to go to an old account or an old address. And I also want to point out something about the timing of all of this, because the timing is not a coincidence. The urgency behind getting these payments out the door right now in mid-2026 is very much tied to the political and administrative landscape. There is real concern among those who have been pushing for these payments that if they don't go out under the current administration, they may face an entirely different set of priorities from whoever is shaping policy going forward. So the push to get this money distributed quickly and automatically is very deliberate. And frankly, I think it is the right call. People who are owed money should get their money. And the fact that this process is being made automatic removes a huge barrier for many elderly and lower-income individuals who might struggle to navigate a complicated amended return process. So let me bring all of this together for you, because I know that is a lot of information, and I want to make sure you are walking away from this video with a clear picture. What we have right now in June 2026 is a moment where real money is moving in real time toward people who genuinely need it and deserve it. The Social Security Fairness Act is delivering larger benefits to nearly 3 million public servants who are being shortchanged for decades, and those back payments are starting to hit accounts now. The IRS stimulus payments are going out automatically to over 1 million people who were never fully paid what they were owed from the pandemic-era relief programs. And beyond all of that, there are serious conversations happening in Washington right now about making the broader Social Security system more fair, more accurate, and more sustainable for the long term. What you need to do right now is make sure you are informed. Make sure your banking information with both Social Security and the IRS is current, and make sure you are watching your account closely over the coming weeks. If you have questions about any of what I covered today, drop them in the comments section below, and I will do my very best to get to as many of them as I can. If you found this video helpful, please hit that like button and consider subscribing so you don't miss these updates, because things are moving fast right now, and the last thing you want is to be the last person to find out about money that could be coming your way. Thank you so much for watching, and I will see you in the next one.